So as always, starting off with the economic calendar, every single Monday and Sunday as well, before the week even opens up, we look at this right here, the economic calendar, because this tells us where the volatility is likely to be for the week and which days are likely to be good in terms of intraday trading. So Monday didn't have any news at all whatsoever, and usually about 8 times out of 10, I personally skip trading Monday. Right, Monday sets the foundation of the week, and as we progress, you'll see each and every week, Monday tells a good bit of how the week is likely to pan out, which we'll review Monday and everything that happened and how it can influence the following days. But Tuesday, we have CPI. So Tuesday is likely to be a very volatile day within the week. Wednesday, we have 8:30 core PPI, retail sales, PPI, and also retail sales. So 4 red news folders, right? Wednesday is likely to be good in terms of intraday trading. And then Thursday, we have 8:30 unemployment claims. So Thursday is likely to be good for intraday trading as well. And then coming into the close of Friday, we have no news at all. So don't expect Friday to be too grand, right? The 2 days out of the week that are likely going to be best for intraday trading, it's going to be Wednesday and Thursday. And in terms of projecting the entire weekly range, right, CPI is likely going to give us that volatility required for strength and direction. So in terms of higher low of the week, right, still we could likely see Thursday or Friday form the higher low of the week if CPI, projects price and expands. But now looking at the chart, doing the exact same thing we did last week. Here we have our obvious points of liquidity, right? So on the NASDAQ, we have these highs here, and then we have this low here. On the S&P 500, we don't really have any highs to refer back to since we already hit all-time highs last week. So we have the current week's high outlined, and we also have a high, not a high, a low from the previous week outline as well. Now I'll go ahead and ask you guys, these are the obvious points of liquidity. Where do you think, and focusing specifically on the NASDAQ, where do you think price is more likely to be headed to? Right, after simplifying it and minimizing it down to just these 2 points. Higher. So a lot of people are saying higher. Why? Why higher? We're closer. That is true. So observing how Monday closed, we can see we are closer to these highs here than we are to this low here. And another thing, if we look at these highs on the NASDAQ, we can see what's special about them. Relatively equal highs, right? It's not just a standard high or low like this high or low like this low. It's, we ran up, consolidated, ran up again, consolidated, ran up, and then finally broke lower, right? So this is a period, an old period of a consolidation. So this is an even higher probability of a target compared to just a standard high due to the fact that price consolidated within this range, right? So just looking at the daily time frame and nothing else, right? Not even going into the lower time frame chart, we can already assume for now that price is likely to draw higher on the NASDAQ going for that 26, 123 and a half. Now breaking down into the hourly chart, here we have the weekly cycle at the bottom. There we go. We can see that Monday opened up right here. Well, technically Sunday, but part of Monday's daily candle. Monday opened up, traded lower, reversed in London session and then traded higher, and the New York session continued higher, going back to where it was at the open and also taking out this high right here. But with it going lower, what did it create? What happened? A sequential SMT on the weekly cycle. Yes, so you're probably wondering, okay, well, there's no quarter right here, right? You said exclude Friday in the video. So how is this a weekly cycle sequential SMT? Well, Friday, if there is an SMT between Friday and Monday, it still can be of use, right? Just as we have it right here. So the NASDAQ failing to take out Friday's low right here, creating the failure swing, and the S&P 500 taking out Monday's low right here, creating the sequential SMT. This can still be of use, right? Think about it like this. Is Friday still a daily candle? Yes or no? Yes. So can it be applied to the weekly cycle? Yes, exactly. All right, so keep note of so far today, just reviewing what happened. We opened up, dropped lower, created a weekly cycle sequential SMT, and then before the New York session, rebalance just a little bit back from the range. Now going from a 1 hour chart to a 1 minute chart with a vertical line outlining the very time that we look for price to trend in a specific direction. Here at the bottom, we're looking at the 90-minute cycles, right? We didn't talk about this in the video, but everything is fractal, right? The 90-minute cycle does play importance in terms of intraday. And we can see on the NASDAQ during Q3 of the 90-minute cycle, it dropped lower, trading underneath Q2's low, whilst on the S&P 500, price did not, creating a failure swing right before 9:30, right? And keep note, was there news today, being Monday? No. What did I tell you guys last week? If you don't have news within a trading day, what time do you look to do something in? Wait for 9:30. Exactly. So right before this Kraken correlation, or right before 9:30, we had this Kraken correlation, and then 9:30 set the stage for the trending market, right? And then you can see right here at 10:30, small retracement lower, but if you're able to catch something like this, or even a piece of this, this is enough. And some of you are probably starting to see a common theme here of right before 9:30, you'll have something in the market tip its hand that tells you what's likely to happen during our key time window. And another thing adding even more probability to this is, was this sequential SMT here in the same direction as the weekly cycle sequential SMT that we talked about here? Yes. So that adds even more probability, since we have now a two-stage Kraken correlation. So we have a Kraken correlation happening on the weekly cycle and a Kraken correlation happening on the 90-minute cycle right before 9:30, which is the key time. All right, does that make sense? We're on the same track. Yeah, there was also a daily cycle with the Dow, but we don't need to focus on the Dow right now. One step at a time. But now going to the 4-hour chart, so back to the higher time frame, we can see, just observing how Monday closed, what did price leave on a 4-hour chart? Fair value gap, BPR gap, exactly, right? But we have two fair value gaps. So we have a gap created here. And we also have a gap created here. So here you're left with a guessing game, right? If you wanted to see these gaps serve as a continuation, you're kind of left stuck in between, in the middle, right? You don't know which one to pick. You don't know how it's going to be high probability. Well, some of you might have seen that I have a 6-hour time frame up here. And whenever you're in a situation like this where you have two gaps, right, on the 4-hour chart, and you're just stuck in the middle and stuck between, and you don't know, what to do. If you drop to a 6-hour chart, or go to a 6-hour chart, you can see, what does it look like now? Just one nice clear gap that can be used. So the 6-hour time frame can help you observe intra-week market structure better with more clarity. So, what we want to see heading into CPI is we want to see the 6-hour gap hold, and then for NASDAQ to reach the target that we talked about earlier into the live stream. So that 26, 123.5. And for the older students, I'd want to see this serve as continuation. And if we're lucky, we might be able to see a strike switch and see the NASDAQ become the leader. How would you enter this as the gap is gigantic? Well, there's multiple ways you can go about it, right? And it all ties to what type of trader are you? Are you, number one, somebody that doesn't really care about risk reward and just wants to ensure that you're in a trade? Or are you somebody that, you can watch a trade run without you if it doesn't get to your required level before entering? So do you want higher risk reward and a guaranteed entry? Or do you want, guaranteed high risk reward, but not a guarantee for an entry? Because how you can do that is, you take the gap. And if you don't really care about risk reward, you just want to entry, you can enter as soon as it breaks, inside of the gap. If you want just a little bit higher risk reward, but still want to ensure an entry, then you can use the 0.25. But if you want a better risk reward and, a chance at an entry, 0.5. And if you, want the ultimate risk reward and there's a good chance it'll run without you, 0.75. And in terms of a stop loss, price could easily have a stop loss here and be fine. It's all of these work. Like, let's say you do the 0.25. Okay, this is a 1 to 1.5. So you break it down here. This is a 1 to 2. This is 1 to 5. All right, it all depends on who you are. There's no set straight answer for that. That's a big stop. If you trade intraday, it is. But if you're a higher time frame trader, this is just your average week. Now, if you wanted precision inside of the gap, then you could go on a lower time frame chart wait for a cracking correlation inside of the gap, and then there you go. But if you just want to set an order and forget about it, then you can refer to back what I was talking about the risk reward and the entries. So the protocol for this week is similar to last week's. Monday expansion and looking for an entry inside of the gap. Yep, exactly. Is 6 hour gap lower probability than 4 hour for continuation? Generally, the higher the time frame, the higher the probability. And yeah, it's Q&A. Q&A time now. When you're going to talk about the third weekly profile. We'll get into weekly profiles and all that later on. But the weekly profiles are just little templates. Right, you're going to understand why weekly profiles work once we get to that stage in core content. Because the only reason why weekly profiles work is the functions of the days of the week. Does the TP that forms on a 6 hour time frame mean anything like you have it currently, or the concept is only applicable for standard time frames? No, it works. It works on this time frame as well. Like, if we're wrong, then this is likely to be a pivot point for the week. And price is going to come up and clear these lows here, or come down and clear these lows here. And that's if we're wrong. Which there's always a chance that we could be wrong. So you always should manage risk. Going back to the beginning of the live stream, thought we are going to look at extreme liquidity points within the last 2 weeks. Yes, but with what we currently have, there is no... This is the most recent liquidity point, right, with where we're currently trading at. In terms of the highs. So since there's nothing within the past 2 weeks, we just go back further and further until there is something. How come on NASDAQ you wouldn't use previous week's high? Because the previous week's high has already been taken out. Or coming into Sunday. You could have, but we always wait for Monday to tip its hand first. What about all the failure swings at the lows, the lack of daily body closure at the highs? What weight, if any, do you place on those factors going into tomorrow? Right now, I'll ask you this. Do we have a cracking correlation supporting lower prices with what you're seeing on the screen right now? Yes or no? No. Now, is there a cracking correlation supporting higher prices? That's a bullish cracking correlation supporting higher prices. Yes. So what does that suggest about the market? Higher or lower? Keep looking higher. Exactly. There's no reasoning supporting why the market should draw lower. The only reasoning that's here is this, which some of you don't even know about. But there's nothing still even backing this up here. compared to the 1, 2, 3 Kraken correlations down here. If possible, what kind of SMT would usually form inside of a 6-hour fair value gap? You'd want to see a daily cycle. So about the thing that I put out with unsymmetrical highs and symmetrical lows, Tron liquidity, etc., so on and so forth. So what does it mean for time to be symmetrical in the sense of quarters? Right, what does that mean? So observing Friday, right, observing Friday's price action, we can see that the low of Friday, what time was it created at? What time? 10 a.m. Okay. Now on the S&P, what time created Friday's low? 8 p.m. 8 p.m. 10 a.m. Right. Is this a symmetrically timed low in the sense of the low of the daily candle of Friday? No. So seeing a Kraken correlation occur, with this low, unless it is heavily confirmed, which it was, that's low probability, right? Now, we'll take a good example here. We'll take Monday's high. Or actually, no, we can take Monday's low as well. Let's take Monday's low. All right, what time did Monday's low form, both on the S&P 500 and the NASDAQ? 3 a.m. Now, what time did the high form? 3 p.m. So do you see of how the high and low of Monday, both on the S&P and the NASDAQ, formed at the same time? So if a sequential SMT were to occur, with the high or the low, that would be higher probability. So the sequential SMTs that you see in price where there's no second stage and price just creates the SMT and then boom, that's it. That's the common characteristic. This right here, where it's a symmetrically timed high or a symmetrically timed low. But the SMTs where it's best to see a second stage Kraken correlation is like this. All right, so does that make sense? So if we see a sequential SMT with symmetrically timed higher low, it's not always needed to have a second stage. Nope. Now, can a second stage still form? Of course, yes. But it's not required. You're not actively seeking it out. Right? If it forms, that's just more power to you. But it's not something. Think back to another time where we said, okay, we want to see a second stage. Would the statement be true then? Lows or highs of cycles must be symmetrical to be considered likely protected. Sequential SMT with a symmetrical higher low is considered a high quality sequential SMT. Yes, exactly. So symmetrical, unsymmetrical on this post was just time-based, not based on what asset swept and the other doesn't. Exactly. Yep. And do you see of how everybody else online has no idea what we're talking about? It's funny. That's why I did that. To show that what you're learning in here, it's at this point now, you can't find it anywhere else. Which people can say, whatever they want, but all I ask, now I've done this dozens of times publicly, all I ask is to show another person that's able to show you what I'm able to show you every single week in terms of telling you what the market's likely to do. And for some strange reason, nobody's ever mentioned somebody. But that's neither here nor there. Is this the same with draw and liquidity, or would it be opposite? It would be opposite for draw and liquidities. You want asymmetrical highs to be the draw. Would the timing be calculated using the traditionally aligned time frame? For example, to determine symmetrical daily cycle lows, use the 1 hour, symmetrical 90-minute lows, use 5-minute, etc. The thing is, time frame becomes irrelevant once you get to a certain point, right? The only reason we have time frame alignments is just to compact as much data as possible in a clear manner into a specific time window, right? That's it. But irregardless of the time frame you're on, you could be on a 15-second chart, 1-minute chart, 10-minute chart, 37, it doesn't matter. This low, looking at it on an hourly chart, was created within the 10 o'clock hour. And if we go deeper, we'll find, at an even deeper level, the exact time. While this low was created at 8 p.m. So think about what I just said with the only reason we use time frames is to compact data, to make it simpler and more efficient. Right, that's it. It's the only reason we have time frame alignment. So draws that were created by sequential SMT are higher probability. It doesn't even need to be sequential. All right, take this for example. This wasn't sequential. This was between Asia and the morning session. So that daily low, higher time frame, higher probability. Yep, exactly. Doesn't time frame alignment play a role with hidden SMT? Yes, but hidden SMT is more so a backup. Right, those that have been with me for a while, you guys know hidden SMT is a backup for whenever we anticipate a crack in correlation, and during a volatile time, price will make a large swing, but then come right back. And if the hidden is there, then we'll still call it valid. But that's really the only time we use it. Right? We're not actively seeking out hidden SMT. When you look for hidden SMT, I just told you. If we expect a SMT to happen, and during a volatile time, so either 9:30 or a news event, all assets wick above or below a specific high, but then come right back, and the closure still provides an SMT, then we'll consider it. But apart from that, we don't really care about it. When do you put a limit order on the 4 or 6 hour gap for continuation? Let's say hit the limit order, doesn't get filled. You said you're cooked if it's not filled when Tuesday closes, but are you looking to enter intraday, lower time frame on the following day? If the following day still, well, I'll say it like this. If the narrative is still valid, and if price is still projected to go within a specific direction, then yes, can look for another trade on a lower time frame. And maybe even reflect back on Tuesday, on Wednesday, for that very specific example. Feels like I accidentally spilled some content for the end of the year. This is still the easy stuff. But I had to, for the newer people, lay the foundation first. Because if I hadn't said last week, okay, we look for extreme points of liquidity, and then roll into, okay, we only focus on the higher low of quarters, and then roll into, okay, the time the higher low of a quarter was made. Right? If it wasn't told to you in that specific sequence there, and I did that exact same explanation, it still would have made no sense. Do we always look for symmetrical highs and lows on the 1 hour, 4 hour? Yes. It's always going to be the highest probability and the most recurring. Thought SMT had to use the same higher low candle between an asset to be valid. 10 a.m. / 10 a.m. If you're talking about this here, or is this what you're talking about? No, right. So think about it like this. While yes, you want to see the markets perform in a symmetrical manner at all times, meaning that if the Nasdaq comes out and takes a low, you want to see the S&P 500, drawing towards that low as well, but not taking it. If both assets would have taken out this low, then it wouldn't be an SMT, right? But in the sense of candle to candle, think about what was shown within the most recent core content lecture. Quarters are candles. Is 10 a.m. from 10 o'clock to 11 o'clock, is that a quarter? Yes or no? No. So you wouldn't look at 10 o'clock, the 10 o'clock high, 10 o'clock low. You wouldn't view that as important. Now, let's say we're on a daily time frame chart and we have Monday's high, Monday's low. Okay, that's important. When all assets break a symmetrical high or low, it's a stronger indication of direction / continuation than if it was an unsymmetrical high or low. Yes. All right, think back to all the times where price has broken above or below, specific highs and lows, and I said, okay, we should just continue from here. Yeah, it's a light bulb moment. Because that's what shows the true direction and strength. But anyways, with that being said, we've already been here for 35 minutes. We're going to go ahead and wrap this one up here. So hopefully you all found this one insightful. I'll speak with you all again tomorrow morning, as we'll be tape reading CPI. So good luck and enjoy the rest of your day.